The SEC has just announced a postponement of the Ethereum ETF launch, which was first anticipated in early July and has left cryptocurrency investors feeling extremely uncertain. This surprising decision, which is supported by further requests for S1 form revisions, emphasizes the ongoing regulatory obstacles that digital asset adoption faces. SEC approves exchange listings of spot Ethereum ETFs. On May 23rd, the SEC issued a rule change allowing 3 distinct exchanges to list and trade 8 spot Ether funds. The exchanges whose applications were approved and the ETFs they will potentially list include NYSE Arca, NASDAQ, and CBOE BZX. Although this is a significant victory for proponents of ETH ETFs, issuers must still obtain SEC clearance before the products can begin trading. This procedure could take weeks or even months, and not all funds are guaranteed to be approved. Nonetheless, given that the chances of approval appeared small prior to Monday, May 20th, this is an important development. On May 20th, reports surfaced that the SEC had requested updated information from potential issuers. This gave crypto analysts and investors hope that spot ETFs would be approved by the May 23rd deadline. Many had previously assumed that the SEC's apparent disinterest in the ETF applications meant the applications would be rejected. But before the deadline, ETH increased by more than 20% as investor confidence recovered. Following the SEC decision, both Ethereum and Bitcoin witnessed rather modest price response, most likely due to the fact that the approval had already been priced in and that additional approvals were required before trading could commence. What the ETH ETF approval means for Ethereum. Perhaps the most significant impact of the spot Ether ETF approvals is the suggestion that Ethereum is a commodity rather than a security. While the SEC did not specifically specify that Ethereum is a commodity, the ETF products referenced in the decision were defined as commodity-based trust shares. This phrasing effectively ends the dispute over how to classify unstaked Ethereum. This classification may have wide-ranging and important consequences. First off, the SEC's ability to regulate cryptocurrencies may be more limited if more of them are categorized as commodities. Regulation could instead fall more to the U.S. Commodity Futures Trading Commission, or CFTC. In addition to the ETH ETF decision, a bipartisan bill recently passed by the United States House of Representatives would effectively split regulation between the SEC and the CFTC. The SEC would regulate cryptocurrencies as securities, while the CFTC would handle any crypto regulations related to commodity classifications. Furthermore, designation as a security may have an impact on a number of other firms and cryptocurrencies that are involved in or terrified of SEC action. Just one day after the SEC's ruling was made public, on Friday, May 24th, Coinbase already cited it in an interlocutory appeal. XRP SOL. Next in line, despite the fact that spot Ethereum ETFs have not yet been fully approved, some are already speculating on which cryptocurrency will be the next to have its own spot ETF. Solana and Ripple's XRP are the most likely candidates for such conjectures. In particular, Solana, an Ethereum rival, seems to be next on analysts' and investors' minds. SOL is the 5th largest cryptocurrency by market capitalization, behind only Binance Coin and stablecoin Tether relative to ETH. Given the similarities in its fundamental technology, many feel the SEC would be hard-pressed to deny Solana a spot ETF now that it has moved toward approving Ethereum. The SEC's new decision regarding Ethereum ETFs. Much-awaited Ethereum ETF debut has been postponed by the U.S. Securities and Exchange Commission. The original launch date was set for early July. This choice was made in response to more remarks made by the U.S. Financial Authority on the S1 paperwork that prospective ETF issuers had filed. The deadline for issuers to resubmit their updated forms is now July 8th. This could cause the launch of Ethereum ETFs to be postponed until mid-July or later. The approval of Ethereum ETFs is a 2-step process, and this delay is one of them. Form 19B4 approval was the initial step, and it was finished in May. However, the S1 forms, which represent the second step, do not have a fixed deadline, leaving the issuers dependent on the SEC's timeline for their review and approval. Market reactions. While some crypto industry players remain optimistic about a swift approval following the modifications to the S1 forms, others are concerned that the delay indicates more serious regulatory issues. Analysts predict that final approval will come within 2 to 3 weeks of the submission of updated paperwork, although the exact date is unknown. Crypto investors who had initially anticipated approval in early July now need to reassess their short-term strategies. Furthermore, the effects of this delay go beyond the launch of the ETFs. It is an essential test for the entire cryptocurrency industry. Once approved, Ethereum ETFs might not only receive institutional recognition, but will also revolutionize the crypto investing environment, creating new options for investors and consolidating Ethereum's place in the global financial system. Crypto pushes toward mainstream acceptance. The SEC seems to be welcoming the cryptocurrency business more warmly after years of legal disputes and opposition. Softer regulatory action from the SEC, as well as an apparent shift in opinions among numerous politicians and parties, could signal a new era of crypto acceptance in mainstream finance. Former President Donald Trump recently revised his opinions on cryptocurrency, expressing his support on social media and even accepting cryptocurrency donations for his 2024 presidential campaign. In addition, a lot of people have conjectured that political pressure from President Joe Biden's administration may have played a role in the SEC's hurried decision to approve spot Ethereum ETFs. However, one thing is sure: nobody wants to be on the wrong side of cryptocurrency recently. This is a piece of good news for the cryptocurrency industry's future. Finally, as we progress, it will be interesting to see how these trends affect the future of cryptocurrencies. With ongoing advancements in technology and increasing regulatory clarity, the crypto landscape is poised for continued evolution and growth.